The latest developments surrounding BlackRock and Ripple's stablecoin RLUSD have sent shockwaves through the crypto market, especially among the XRP community. What initially looked like a routine stablecoin update has now evolved into something much bigger. RLUSD is no longer just another dollar peg token. It is quietly positioning itself at the core of institutional finance, linking Ripple directly to BlackRock-related tokenized funds and cross-border payment infrastructure. This moment matters because it represents a shift from speculation to real-world financial integration. In this video, we are going to break down what this means, why institutions are paying attention, how RLUSD strengthens Ripple's ecosystem, and most importantly, why XRP stands to benefit from all of this. So, how did RLUSD move so quickly into institutional finance? RLUSD's rapid ascent into institutional relevance is one of the most striking elements of this story. According to Cryptidale News, Ripple's stablecoin has already begun serving as a collateral tied to BlackRock-related tokenized funds, while also being used in cross-border payment flows. This is a major leap that most stablecoins take many years to achieve, if they achieve it at all. What makes this even more impressive is the timeline. In less than a year, RLUSD progressed from launch to enterprise-grade usage. The accompanying documentation shows that its market capitalization surpassed $1 billion in December and has now climbed beyond $1.2 billion. That level of growth signals something crucial: institutional demand, not retail hype. And crypto institutions do not move fast unless three conditions are met, and that's liquidity, compliance, and clear utility. RLUSD appears to have checked all three boxes faster than expected, placing it among the top 5 stablecoins globally, a milestone Ripple CEO Brad Garlinghouse openly aimed for early on. So, why does regulatory alignment make RLUSD different? One of the biggest reasons RLUSD has gained institutional traction is its strong regulatory grounding. Ripple confirmed that RLUSD operates within a framework that includes state and federal oversight, along with conditional approval for the Ripple National Trust Bank, or RNTB. This alone separates RLUSD from many competitors operating in regulatory gray zones. Beyond the United States, RLUSD has also gained recognition from regulators in Dubai and Abu Dhabi, two jurisdictions that are quickly becoming global crypto finance hubs. This multi-region regulatory validation sends a powerful message to institutions. RLUSD is built for long-term compliance, not short-term experimentation. For institutional investors, regulatory clarity isn't optional, it's mandatory. Funds managing billions of dollars cannot afford legal uncertainty. RLUSD's structure offers something rare in crypto: a stablecoin designed from the ground up for regulated financial systems. So, how is RLUSD being used inside BlackRock Link capital flows? One of the most significant revelations is RLUSD's role as collateral within Ripple Prime and as an off-ramp for tokenized funds like BlackRock's BUIDL. This places RLUSD inside institutional capital workflows, not merely alongside them. Collateral usage at this level implies deep trust, sufficient liquidity, and operational reliability. Institutions are not experimenting with RLUSD. They are integrating it. When a stablecoin becomes collateral for tokenized assets, it transitions from being a transactional tool to a foundational financial component. This matters because collateral relevance often leads to long-term balance sheet exposure. Institutions holding RLUSD are now directly interacting with Ripple's ecosystem, creating repeated usage rather than one-time transactions. That strengthens the entire infrastructure supporting XRP. So, how does RLUSD strengthen cross-border payments? Ripple also confirmed that RLUSD is helping build a foundation for faster cross-border settlements through Ripple payments. This is a critical detail because Ripple payments is where XRP already plays a liquidity role. The company highlighted growing institutional traction, noting that Amina Bank became the first European bank to adopt Ripple's licensed end-to-end payments solution. Additionally, Ripple expanded its custody services into the Middle East and Africa, regions known for high cross-border payment demand. As RLUSD integrates into these payment flows, transaction volume increases across the same rails where XRP operates. In other words, RLUSD amplifies network usage, where XRP continues to facilitate liquidity and settlement efficiency. So, does RLUSD replace XRP or strengthen it? A common concern within the community is whether RLUSD competes with XRP. The answer is very clear. It does not replace XRP. It complements it. RLUSD functions as a stable unit of account and collateral asset, while XRP remains optimized for liquidity, speed, and settlement. As institutions adopt RLUSD, they gain exposure to Ripple's infrastructure without speculative risk. Over time, this leads to consistent, non-speculative demand across Ripple's rail, indirectly benefiting XRP through increased throughput and deeper integrations. A regulated, high market cap stablecoin operating at institutional scale strengthens the ecosystem XRP is part of. Network effects grow, transaction volume increase, and Ripple's position in global finance becomes harder to ignore. And finally, my own personal opinion about this is that this is one of the most important developments Ripple has delivered in years. RLUSD's integration with BlackRock Link products, combined with regulatory alignment and cross-border utility, signals a shift toward real financial adoption, not hype-driven cycles. For XRP holders, this isn't about overnight price action. It's about structural positioning. RLUSD is quietly pulling institutions into Ripple's ecosystem, and XRP stands to benefit from that expanded usage over time. If adoption continues on this trajectory, Ripple may be building one of the most institutions-ready blockchain infrastructure in the market. And this ends our video. Thank you very much for watching and see you on the next one.